Well, g'day there, everybody. Thanks a lot for joining me in this weekend market update. What I've just done is I've completed that pro analysis class, which I do each and every weekend, and there is a big difference between the recording I posted last week and that I've just posted only a couple of minutes ago. Last week we moved into the week, and the markets themselves, they hadn't had time to rest, and that also correlated very nicely with our top 12 individual trade list. Well, fast forward obviously over the past 5 days worth of trading, and although the net momentum or the net movement across the board collectively for the Dow, the S&P and the Nasdaq really wasn't all that impressive, yes, they did close up net positive. What's really happened over the past 5 days worth of trading, as inactive as they have been for people in that class, is that what it has done is that it has really crystallized in terms of individual trades forming, in terms of, I guess, the structure of those individual trades forming, and giving us more so of, in terms of, or in ways, a better foundation before we really start jumping into a bunch of trades. That's really the beauty of technical analysis. What has been happening is that it has been evolving as the market has been moving through this very short-term consolidation. Now, as at the close on Friday, the markets are trying to push collectively above their historical highs. Yes, some have done that. The industrial average did close up on Friday, as you can see, 22 points. We did get above the swing high, and we also pushed on back above, obviously, Thursday's high. The net weekly move was up 105 points. The S&P 500, again, closing at a new all-time high on Friday, up $8 during Friday's session. The net momentum was 6.77 points. A lot of these candlesticks, when you start looking at them and breaking them down, again, is setting up stair-step consolidation patterns, which are also working in conjunction with these rising exponential moving averages. So sometimes the ebbs and flows of the markets dictate to us as active market participants that we need to sort of sit out of the market, and oftentimes that sort of corresponds with just simply no trades, which is simply triggering above where our analysis allows us to enter or begin to act. But what is happening right now is that we're seeing a lot of positive signs continue across the board for these financial markets. Also, if we extend the discussion into the transportational average, this is working very, very nicely. You can see, if my chart wants to work with me, you can see that it's holding up above this resistance area that we've struggled to overcome dating back to July 2017. It looks like the back test is actually occurring on the transportational average. X marks the spot. We're coming back down, and we're holding at the 50. So if the transports see a bounce some point during this week or the next week, it is going to be a very good sign in terms of Dow theory that the industrial average should continue to hold above its high that it posted on Friday, which is fantastic news. The Russell 2000, have a look at that chart, moving absolutely flat, completely horizontal, but we are still holding above the 50 exponential moving average, and it's looking very nice, like a coiling pattern, almost a Bollinger Band squeeze taking place with those sideways moving 10 and 20 exponential moving averages. Now, yes, the markets do look a little bit giddy. I mean, the candlesticks themselves, this is the S&P 500. We've got some doji candlesticks. We've got just some ordinary spinning top candles. We have almost a dragonfly doji on Thursday, hangman candlesticks. You've got gravestone dojis, normal dojis. You've got one engulfing candlestick just here. Yes, there is a little bit to be, I guess, concerned about, but really only in relation to the candlesticks themselves. You can see collectively, again, the pattern on the Dow Jones Industrial Average. Hangman, a couple of spinning tops, some doji candlesticks, shooting stars, but we're still grinding higher. And really what we're looking for across the board is, first of all, to see these markets move in agreement. So even if it is a slow and ugly grind higher, that's fine. It's going to work out very nicely for a lot of these individual trades on the left-hand side, or individual stocks on the side of my left-hand screen. But also what we've come to in terms of trade setups too is that there's a couple of trades in here that are setting up some very nice shorting opportunities too. So just in case that the markets actually do pull back, we have two trades in particular that are looking really, really nice. I'm not going to name them, but if I just quickly show you some of this analysis, I mean, you can see for yourself just what's happening. These stocks are simply setting the framework, they're setting the structure upon which we are going to act once they are broken, and of course once we see some additional things. Baidu is a little bit of an outsider at this particular point. Caterpillar moving sideways. ConocoPhillips breaking out on Friday. You've got Chevron, again, a little bit of an outlier at this particular point. Google and Apple looking relatively strong. You have Amazon, which is still pushing back up, setting up a very nice continuation pattern, a weekly candlestick pattern, which is very rare, but it's done it on Friday, which is very, very enticing for us. And also, most importantly, at this particular point, there is tremendous opportunity in the world of currency. Most importantly right now is the US dollar. A very good chance that we are potentially seeing a trend reversal which has taken a number of months to actually set up. And that is offering a lot of opportunity, not only for the US dollar, but also in the world of commodities as well. So a lot, or I mean, I should say a lot was spoken about in that class. And I mean, you know, some weeks really just to surmise this weekend market update. Yes, the markets are healthy. They're looking good. Definitely, the rate of momentum to the upside is certainly slowing. But at the same time, although we did have a relatively inactive week last week, it looks as though we're going to get a lot of action in the world of individual trades triggering this week. So a pretty exciting week upcoming, no matter which direction the market chooses. That's the beauty of being as neutral and as, I guess, non-biased as possible. And when you come into analysis and thinking about financial markets and applying technicals to that picture. If you have any questions at all, please send me an email anytime you choose to. Other than that, everyone, enjoy your weekend, and I'll be back with you in the week upcoming for some more market updates. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.